Good afternoon, everyone, and welcome back. This is Daily Trend Analysis with a quick market update for today, Thursday, 19th of September, the day after the FOMC interest rate decision, in which the Fed really provided a jumbo rate cut of 0.50%, 50 basis points, and the economic projections were quite impressive. Let me just show you where are we in terms of economic projections, because as I was saying, 50 basis points interest rate cut is usually reserved for the recessionary periods. But right now, Fed is saying that it's basically not in a recession, it's basically just adjusting and correcting and putting on a start of the cycle with strength. So as you can see, the federal fund rate changed from 5.1 to 4.4 for 2024 in here. So the previous projection was 5.1. Now it's almost 70 basis points for the end of the year. So we expect at least two more cuts of 50%, of 25 basis points. So for 2025, we are going from 4.1 to 3.4, and longer term, we are basically ending at 2.9 Fed rate. That's for the funds rate. In terms of PCE and inflation, for this year, we are reducing from 2.8 to 2.6 on the core PCE and from 2.6 to 2.3. So decreasing the projection for 2025, and maintaining the target at 2% for 2026. Also, for the GDP, we are decreasing a little bit from 2.1 to 2% this year, but longer term, 2%. And lastly, unemployment. This year, they are expecting to increase to 4.4%. And the next year, also, if this year does not go to 4.4, it will go from 4.2 to 4.4%, and at most in 2026 and 2027, we will stabilize at 4.2 or 4.3 for 4.2 in the longer term. So basically, they are adjusting everything. In terms of GDP, they are decreasing a bit. In terms of unemployment, they are increasing. In terms of PCE and core PCE, they are decreasing the projections. And in terms of federal funds rate, they are heavily implying that they are going to cut more times this year. So this is in terms of the numbers. But what Jerome Powell said basically yesterday, was really interesting. So as you can see, the FOMC has gained greater confidence in inflation, moving sustainably toward 2%. Judges' risk to employment and inflation goals are roughly in balance, more or less. That's why they are basically cutting 50 instead of 25. They think that they need support a little bit the employment. The economy is strong overall. The labor market has cooled from formerly overheated state. Our decision today reflects the growing confidence that strength in labor market can be maintained. That's why they are cutting so much. And consumer spending has remained resilient. This is the important part for avoiding the recession. Consumer spending. Our patient approach has paid dividends. They have seen that inflation has progressed much faster than expected, so it's much closer to their goal. That's why they are not basically pushing the 50 out of nowhere. They are saying we are moving this much because inflation has progressed faster, so we have to adjust policy faster. The point of view of Powell in the interviews, in the questions it's basically that upside risks to inflation have diminished and downside risks to the labor market have risen. We are all worried about the labor market. If the economy remains solid and inflation persists, we can dial back policy more slowly. So don't expect 50 basis points after these 50 basis points. I don't think they are going to cut again 50 unless something big happens. So there is nothing in our projections that suggests that we are in a rush. We don't think we are behind the curve. We can go quicker, slower, or even pause. This is quite important to understand on rate cuts if it's appropriate. No one should look at today and think that this is the new base. I was saying 50 basis points is going to be the exception. Retail sales and Q2 GDP indicate economy growing at a solid pace, and housing inflation, it's one piece that is dragging a bit. This one concern for everyone. Basically, we are watching housing prices. So after seeing this, what the Fed said, after seeing the economic projections, we have to really focus on price action. Bear with me because I'm going to recap yesterday's price action and today's price action, because yesterday was a really tricky day and today it's been one of the best days for me in, I think, maybe in the last 3 to 6 months or even in the year. I'm up quite a lot. I'm up almost 5,000 bucks because the overnight squeeze was unbelievable. So let me just go back a bit to yesterday's price action. This was yesterday's. I was just watching this huge inverse 15-minute fair value gap after the late party on Tuesday. During the overnight, we were just chopping. Everyone was waiting until the FOMC. So we were just chopping around, but look at the first thing that I saw. We were just building liquidity, establish a range, and we dumped into London. Into the London Open, we started to push, and this is the Nasdaq. The Nasdaq did a higher high, while the ES, they were doing lower highs and lower highs. So the Nasdaq was stronger and manipulating to the upside to really continue moving lower to grab this sell side liquidity. That's why on this inverse, on this 5-minute order block, I got the entry. Look at this rejection of the fair value gap. The entry on the 1 minute after the order block provided me a really nice short into liquidity for 28 points right here. My entry was after this candle, rejection of previous fair value gap, inverse fair value gap, order block, entry, just 9 points of risk towards sell side liquidity. That was one of the trades, quick scalp into the overnight, and then we started moving higher. I found another setup, liquidity, but there was no an A quality setup. There was no, my strategy is based around fair value gaps, an inverse run through, and if possible, a unicorn entry with an order block, low, high, lower low, higher high, and then this is the order block on the 1 minute. I never got the entry in this 5-minute fair value gap. We started pushing higher. And at that point, I was saying, okay, let's just watch the market and see the open. We saw the open. We all knew that. Let me just explain you why I was waiting for sell side all the time. Yesterday was the day of the rollover. Hundreds of thousands of contracts were going to move from the September to December at that day. And what they need is a cheap rollover. So they just need the price to go lower to really then buy those contracts and roll them over to December as cheapest as possible. So I was really waiting for this minor sell side liquidity, all this liquidity to be run through. And I was really waiting for the big liquidity down here, but it was just so beautiful to take sell side, to open a fair value gap, to take the low, high, lower low, and then the order block in here with a micro pullback in here. I mean, it was a little bit of expensive, 17 points, but the range was almost 3.5 risk reward ratio towards this sell side liquidity. I thought this was even a good entry for the FOMC, but I was just wanted to get this trade and just be done for the day. I don't usually trade FOMC interest rate decisions, and this one specifically was super sketchy. Everyone was confused about 25 or 50 basis points. So basically, I took what the market gave me, and that was a huge trade. 57 points plus 28 from the overnight. It's almost 90 points. It's almost $1,500. And then during the FOMC, we just got a lot of scary price action. Then we move lower to take sell side. And then that just the day ended. We put a lot of liquidity here. And when I was trading through the phone with the phone late here in Europe, I was watching this and I thought, what the heck? What the heck is this move? So I started saying, okay, we took this. Let me just do some quick setups. This was the 5-minute quadrants, and I was watching these 5-minute and the 1-minute inside that, because that squeeze was really something. But maybe I can have another opportunity, because they were not squeezing all these people. They just squeezed these and these guys. So if we were certainly bullish after the jumbo rate cut, we were going to reap faces all night long. And that's exactly what we did. But let me tell you, sometimes you are lucky. And yesterday I was lucky. This is my setup. You know my setup. This is the 1-minute fair value gap. It tapped, and I took these candles range. The entry was here. It was quite expensive, 22 points of risk, but I was just taking a bit. After yesterday's good money, I could afford just take a little bit more risk. But look at where was the stop. Right here. Right when I usually put it. Right below the candle that made the fair value gap. And I didn't get stopped out by 1 point. By 1 point. And then look at this beauty. Look at this beautiful 146 point trade that I did after knowing that this was going to be run through, 2 fair value gaps being run through, another fair value gap bullish being open, not being touched, and then squeezing all these people. So 146 points, it's almost $3,000 with one contract saved by 1 point. I was just lucky. I was there to take the setup, but sometimes you get lucky in those stops. After that, I continue seeing the price. I was waiting for this consolidation. So take yesterday's liquidity in here and in here, and that was what I was projecting. This was the projection, and look at this. 1 tap, 2nd tap, 3rd tap. We were just looking forward to destroy that level. So I took the consequent encroachment there. This was an order block on the 1 minute, and I literally took the first fair value gap, knowing that perhaps we were going to manipulate into the breakout. I put my stop below that order block, right there, at 12 points below the order block and right below the consequent encroachment in this candle. So we tapped almost perfectly. the consequent encouragement in the fair value gap, and we just skyrocket to the last liquidity at 926 level that I've been mentioning for weeks. You remember this? 19,926. This was the trade. I even added in here because we opened a fair value gap, we raised another order block. Look at this beautiful touch of the order block. Another contract in here, and the stop below the candle and below the order block, 11 points for another contract. So basically 54 in this, 80 points in here. That's 130 plus 150. That's almost 300 points, almost 6,000 bucks. I'm exactly 5,680 something. Look at this look at this beautiful. I have screenshotted this. This is for the records. This is one of my best days. I didn't sleep too much, but it was really worth. And after that, let me tell you, I just don't care. There's no drawings. There's nothing. There's just one liquidity here that I had charted that we also took, and that's all. I just don't care. In a day in which before the open, basically at 3 a.m. at London Open, you have almost 6,000 bucks. You just have to stop, lock it for the day, and enjoy your fucking day. Yes, this is bullish. Yes, the ES, it's making new all-time highs. But I don't care. I don't care. Because this was exceptionally perfect traded. This was a beautiful trading day with beautiful executions, with beautiful price action, squeezing to the upside. Days like this have to be recognized and locked up. And that's my lesson for today. I'm not going to analyze open price action after the open price action after the open. I'm seeing 5% green in Nvidia, 4% in Apple, all the banks, all the semiconductors, even the Russell, it's 2%. The RSP, it's slowly but surely gaining a little bit more momentum. It's a little bit more choppy, but I mean, this day is huge. This day is huge. And if we see the daily, we have this as a main, and then we have this. These are the targets that I will be watching this week. But let me tell you, I'm not going to risk it anymore. I'm getting a big payout after this week, and I'm being super transparent with you. I won't be trading as much. I want to relax after the 50 basis points, and after this huge day, I want to really take it easy, maybe take some days off. Who knows? But this is what I was waiting for, and a big day. The Fed has pivot, and we have to really take into account the context of this Nasdaq and this S&P. Because as you can see, the S&P and the small caps and all those businesses are pushing higher. The Nasdaq is not feeling it. Nasdaq is pushing, yes, but we are way below all-time highs. So that's something to recognize. This is an environment in which the Nasdaq is not welcomed. Lower interest rates, it's obviously bad for the dollar. It's good for foreign currencies, but I mean, for tech, it may be not as good. So I want to really take it easy to see if we are going to continue dragging higher in a non-recessionary environment, because after these 50 basis points, we have to really digest what happened, and I want to let some time happen and take some payout, take some rest, and really see how I can approach the market for the rest of the year. That's something I've been slowly thinking about it. And after today and after yesterday, this is the perfect moment. So I will continue uploading videos, but I won't be trading that much. I want to really analyze and see what the Nasdaq is planning to do. What are in the future for the Nasdaq? Because there's a tricky situation right here, and I want to be super delicate, super conservative, super flexible in my approach, and don't ruin the rest of the year thinking that the Nasdaq is going to skyrocket to all-time highs because the ES is doing that. So that's my recommendation. The ES is squishing, all the small caps, all the banks are squishing, but be careful with the Nasdaq. That's my recommendation. Be careful, think twice about what it's doing, and manage your risk because you never know. So let me just put it again. This is what I would be watching for next week, for the couple of days. And that's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel because I upload videos like this one every single day for market forecast, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is not over yet. We are really pushing higher. So if you have profits, do like me, lock them up and enjoy your day. Discipline, patience, and risk management are the toolkit. Best skills to success in this industry. Stay safe, everyone, and see you tomorrow.